All right, in chapter 2, we're going to start off with the actual account. The account has three things included. We have the account title, we have the left side, which is considered the debit, and right side, which is considered the credit. Don't think too much into debit and credit other than direction signals. Just like in your car, you have the left side and you have a right. Um, Nothing more, nothing less. An example over here is with the cash and the accounts payable. These are called T accounts. So this is a T account for cash, and this is a T account for accounts payable. And a transaction happened on 9/1. Actually, this was the balance of $12,000. On 9/5, there was a debit to the cash account for $2,000. And on 9/10, there was a credit. So if there's a credit for that cash account, we paid something on 9/10. 9/20, the same thing. We paid something for $1,000. So the total of all the debits and the credits on 9/30, the balance is $11,000. So basically, there's a debit balance. A debit balance is when total debits are greater than total credits. That's all it's saying there. The next slide, very important slide. We have different types of accounts. We have assets, liabilities, drawing, owner's capital, expenses, revenues. In order to increase an asset, we debit it. In order to decrease, we credit it. The normal balance for any account is the actual the actual account where we increase it. So for an asset, we increase an asset by a debit. Therefore, the normal balance of an asset is a debit. Liabilities is going to be the opposite. We decrease liabilities with a debit, and we increase liabilities with a credit. Therefore, normal balance is a credit. Drawing account, owner's drawing. Basically, we take money out. The owner takes the money out for personal use. We increase that owner's drawing account by a debit, and that's going to be the normal balance. We decrease that by a credit. Owner's capital account is the actual opposite of drawing, where the normal balance is the credit. Expenses, normal balance is a debit. Revenues, normal balance is a credit. Memorize this. This is the cornerstone of every single chapter that we go over for the rest of the class. Here's a summary. If I do want you to memorize something, it's going to be this. So assets, if we debit an asset, we increase it. If we credit an asset, we decrease it. Normal balance is an increase. Liabilities is the opposite, like we said up here. The debit, we're going to decrease it. A credit, we're going to increase it. And the increase is the normal balance, as we see over here for owner's capital. Normal balance. If we increase drawings, it's a normal balance. So that's going to be a debit. Revenues increase. Normal balance is a credit. Expenses, we increase with a debit. Normal balance. Go over that if that's still unclear, or just post in class. Here we have normal account balance is basically what we just went over. For each account, indicate the normal balance, whether it be a debit or a credit. So accounts receivable, we have a debit. Rent expense, we have a debit, would be the normal increase. Service revenue, normal balance will be a credit. Accounts payable, normal balance will be a credit. Owner's capital, normal balance is a credit. That's because we increase these three with a credit. Service revenue, accounts payable, owner's capital. In summary, the only two accounts that increase with a debit are assets and expenses and drawing. So assets, expenses, and drawing have a normal balance of a debit. Everything else is a credit. The recording process, 3 steps. We analyze, which we get that information from source documents such as an invoice. We record into a journal called journalizing, and we transfer those journal entries into a general ledgers, also called posting. Here's an example of a general journal. Don't really pay attention to this for the homework. You can just skip that reference and just go through here. You can hit pause anytime. And I only have about 16 seconds left in this 5-minute presentation. So here's actual examples. Ed Boggs invested $5,000. So we debit cash, credit the capital account. Any questions, feel free to post in class.